Chapters. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Friday, May the 31st, end of the month. We're going to look at these monthly candles in a moment. Let's just run the numbers. Dow is at 43 at 38,154 at a 2,000-point decline straight down. This is going to be very important. Why? Whenever I see a straight down, very strong single leg A, or even a single leg A to the upside, it has to be monitored very carefully to see how it retraces. And in this particular instance, it didn't quite get to the low that is still my target for the, I'd say, the next target based on the Chapman Wave Inside Wedge, Technical Friday today, so we're talking technically. This Inside Wedge dash, it should be red, sorry, dash pink. And make that dash right there. This is what's called the Chapman Wave Inside Wedge Target Support Line. And it gives you kind of a sense of where the search should go, where the support levels will be. It does one at a time. Look, I did that. Now we're doing this. What's really important is the low that was made on, that was on the 2nd of May at 18,225. That's going to be very important. We're only at 38,156. So that's another 1,000 points. So to get there, a lot has to happen. I think it's now going to be a bit of a process. The single leg A to the downside says very often you're going to have a fantastic move to the upside, or you can have a little bit of a bounce and then a very much smaller leg B to the downside, and then take a nice arch formation at least time. In the meantime, the Dow has been the weakest link of all. Look at the S&P. The S&P right now it's trading up about 4. Let me see what it is. Up 3.75 at 52.39. That green 9-period moving average. Let me just put this Technical Friday. So let's go to this chart right here. In this chart, we've got, I'm going to just do this for a second here. Let me show you the Dow. The Dow reversed to pink a couple of days ago. That gave me the sell signal, which was upgraded to a sell mode. Also, it was leg D. In the leg D, we decided that we were going to start a short position, and that's kind of the way we sometimes do it over the years, where we get to that peak D, and that's where other things can happen. That's we start to get some insurance, and we're looking at it now accelerating down with a little bit of a rally today. Look at the S&P. I'll do the SPY because some of you don't get all these indexes, but look, here's the SPY. Green, way over the 14, but both of them are starting to dip down a little bit. Prices underneath. It's trading up 40 cents at 523.02 right now. I'm suspecting that is a kind of a double top like that there. And we'll see what happens next. But in the meantime, I'm anticipating that next week we do see a pink 9-period moving average in the S&P. So for those of you looking at the actual cash S&P, up 3.44 at 52.38. And it's the same picture right here. And look, it turned positive back in early May, and it's been green ever since. All of May is going to be green unless something happens today, but I don't think it's going to turn pink today. QQQ, same thing. QQQ's down $1.26 at 450.28. Sharp reversal, but not on the 9-period moving average. And that, to me, these three lines it's what I call my indicator of last resort. It takes a while before this turns pink or turns green. And that means this is the gray. The thick gray is the price that we're following, current price. Green is the 9-period moving average when it's over the black 14-period moving average, or pink when it's under. Look at the IWM. A little closer, very close, in fact. Look at that. The price is above, but it's just dipping very, very gently. And I suspect IWM might dip, but we might see it have a narrow range between if it does go pink, between the pink and the black lines. I don't know. All I'm saying is that so far, the Russell 2000 for the very first time has held its own, and that's good. I should mention we are long, but that's not the point. The point is that it is in this current environment, up until this very minute at 10:11 a.m. Eastern Time on the 31st of May, it's still holding very nicely, and many of the others have started to dip a little bit deeper. Okay, let's get to, I want you to look at the SMHs. SMH is trading down 62 cents at 241.68. We actually had a short position yesterday. It worked out really well. Got taken out today, and now it's running back again. So I just wanted to show you. I had a question about this from one of my subscribers. Look at the SMH. This is the Van Eck semiconductor ETF. It's 3 red candles so far in the last 3 days. The green candle went to an all-time high, 250.85. None of this that I'm looking at here is negative. The 9 is over the 14. The price is over the 9. Very good. And look how wide the distance is between the 9 and the 14. Oh, wait a minute. The 9-period differential in the MACD is over the 26-period exponential moving average and looking very good. The relative strength is a clue to say this is starting to pull back quite a bit. The stochastic is flat at 83%, but it's starting to dip. Very important. Now, this to me is really important. Look at that blue line, Technical Friday. So what are we looking at? We're looking at that ictus, that little turn, that V-shape right there, that point coincides exactly. I'm not sure if that did. Let me just check this one right here. Yes, that one also coincided exactly, but it was a little lower than before. This one as well coincided on balance volume, got the exact turn. Now, sometimes it does, sometimes it doesn't. When it does, I respect that. I say, hey, that to me is really important. It's another sign that's saying we are starting to see internals in the semiconductor daily chart start to not deteriorate, but start to reverse. To me, that is very important. So for our subscriber looking at this, who didn't get stopped out and still in the position, and we had just a very small, a nibble at the thing. In fact, we've got something else, a much bigger position on a short side in something else, which I'll talk about in a little while. But that's a more aggressive, that's actually a very aggressive small position. Okay, what we're looking at here in the semiconductors is over the period of, I'm going to go all the way into Wednesday afternoon, Thursday morning. Can it hit 237? Is it 241 right now? Can it start to close? I'm sorry. Can it close under the SMHs? I think the semiconductors are starting to show some wear and tear. That's the reason why I think that the IWM Russell 2000, because of this rotational aspect, I don't think it's going to survive right now, but it's holding much better at this particular point. Okay, that's the semiconductors. Let's go to XLK. Also in the tech sector, S&P tech sector. Oops, I typed in there it is. What we're looking at here is it made a peak E top. I'm going to do this in a minute. Right there, that peak E top. The right little pointer. And now it's down 94 cents at 208.92. And the top that was made, if I can read it, is up in the 217 area. I'll be right back. Basil Chapman, Title Conditions Hour, Technical Friday. We're looking at a consolidation unfolding. It's going to continue in June.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so that XLK, the Select X Spider Fund, is pulling back. The 9 is still over the 14. The MACD has now crossed negative. Stochastics crossed negative at 67%. On balance volumes turned negative. That relative strength is very weak. So I'm suspecting it's going down. So the question came in, I'm going to, dude, you didn't ask me about it, but you did mention uranium play DNN, building momentum with big volume. I'm going to do that. Let me just do that right now. DNN. Now, dude is not afraid of really getting the very big pricey stocks. He's got this one called Denison Mines Corporation. I remember seeing this name way back. I don't even remember when. I just remember it because I was saying, do you spell it with 2 N's or 2 S's? And it's 1 N and 1 S. And that's the only thing I remembered about it. Uranium is trading in leg E in the monthly chart. It did a peak D way back in 2021, pulled back and then ran up. It is trading, and you won't believe this. This is peak A, B, C. It's trading up in the stratosphere. It's at $2.45, $2.45. If you look at the chart, this is what I always say about charts. It's so fascinating. We all love charts. I mean, look at this. You could not tell. It looks like a biotech, actually. But you could not tell what the price of this is. It could be $100. It could be $250. I don't know if it would be $1,000 with these long wicks. They don't do that very often. But definitely in the $100 and $200 area. And yet it is. Look at this. It has an entire chart movement that looks absolutely legitimate. It's only 245. It just said the 200-period moving average in the monthly chart. It is in, I haven't done the weekly, but the weekly 9 is over the 14. It looks fantastic. MACD is good. Stochastics at 87. And same thing in the daily. Leg D in the daily. Yes, you didn't ask me about it, but I'm just saying, like uranium stock that we have is just like a buy and hold. I think the uranium stocks are going to make highs this summer. This is the way it looks. I might be wrong, but that's what I'm thinking. So this is acting very well. I would say it's at 245 right now. If it closes under 225, it's going to stall for a little while. But so far, it's acting very well. All right, next thing was QQQ. I had a question from someone who wanted to be looking at the TQQ, SQQ. I believe it was the SQQ. Let me just double check. Yes. I'm sorry I didn't get to it. I should have got to it right at the beginning because that's where the market really started to, I would put it this way. This is where the rotational aspect, where the Dow, which we thought today, that's why we took a little bit off right at the opening, on the short side, had a bounce in it. And yes, it's up 32%. Look, the S&P is already down 11. The QQQs are down 3. As we speaking, it was down 1 point something when I did the update. Yes, I'm going to suggest, I feel very comfortable in saying, if I know that you know how to handle your positions. I'm not going to talk to you about that. I'm just going to say, you missed the best entry at about 450. The high today is 452, so in the 450, 180 area. So this is already maybe 3 points lower. But I am going to say start your engines. You can do that. And then what I would do is I have a mental preparation. I do my homework like somebody in the den, like Z and all the others who do all that homework before they actually put their positions on. I do my homework so that I would add to the position. I'd add it 2 ways. One is, if it really starts to tank later today, I'd add to it for over the weekend. But if it has a little bit of a bounce, I'd get another position, maybe a little higher up. And so that you've got a few positions that you can sort of wiggle and jiggle around that because the weekly chart is still fantastic. And even the daily chart, as of now, hasn't given me a sell signal, not let alone a sell mode, but not a sell signal. But it's in preparation. And I'm just saying to you, everything I'm looking at is suggesting, especially when you're looking at something like a Microsoft down another 3 today. It was down, 12, 13. It's at 411. I just think that the big caps are going to have a little bit of, That's my opinion. All right. I wouldn't get carried away right away because you actually have missed 2.5 to 3 points of the best move. So the SQQQ, let me look at that because it's a different chart entirely. This is in a single leg A to the upside. Yes, that bar cannot be an A because you have to wait for the little ictus. You have to wait for the trough. And then on the right side, you can start to count the peaks. So this is the start. The 9 is still way under the 14. It's pink. The MACD has turned up. The retro strength is turning up. The stochastic is starting to move nicely. It's at 25%, considering it's just come off the low. And at 944, around about 944 is the low. It's trading right now at 10.28. That's the thing. These things are going to give nice percentage gains. And if there's time, because I think there's going to be, at some point, there's going to be more time than price. That's what I'm thinking. So in this particular instance, we've done almost the same thing that you would be wanting to do. So, okay. So I hope that's clear. Next thing I want to look at was it NEO? NEO I was asked about. I didn't see it. It was for yesterday. I just be really careful of these. This is actually hold quite nicely. This is a peak A. That's what happened? And there it is. This is B. This is C. This is a double top right here. So I'm calling it C1, C2, putting in a plus sign. And now I'm going to do my best to, I don't want to do it, but I'm going to try. So view, I'm going to go to data window. Good luck. Oh, I don't know what's something brand new now. It's got this full display. I don't need that. All right. I'm just going to do I don't know what's going to happen. I'll have to ask my subscriber, backup man, helps me all the time. What am I looking at? 604? And, oh, man, I don't even know what's I'm looking 605. Oh, that's a D. So that is a D. Sorry. That's the reason why I wanted to go through it again. So that is a peak D. And it's just a decent pullback right now in NEO. Yeah, all I'm going to say is I think that you usually look at this in terms of options. That's the only way I'd look at it, because at some point, this is the Chinese Order Company. Where did I write that? I didn't write it. I used to have it. Electric car company. Yeah, it's holding very nicely. Today, the 9-period moving average just went green. So I would just do this. I would look at it and say, it's speculative. The 9-period moving average flipped from green to pink way back in, I think it was September, but up in the 10s, and then it plummeted all the way down to the 3s. And here it is, 350 or so, and now it's trading at 543. Nice action, but the 9 hasn't gone higher. So I call this purely speculative. Personally, I'm not into touching the electric car companies at this particular point. I just think it's a little hazardous because there's so many cross currents. So all I'm saying is acting well. 5.05 to 4.95 is your key support. Takes that out. I'd say be careful. In the meantime, NEO is doing okay. NIO trading at 5.2 cents right now. Trying to make a confirmation, so that in a way is good. So yeah, the bias visually is positive. I'll be right back. Basil Chapman, Tiger.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Good morning, everyone. We're going to go to Garo in Newport Beach. Garo, how are you?
I'm very good. How about you, sir?
I'm good. Oh, your voice sounds a little stronger. Good. So you'd like to look
Thank you.
You'd like to look at Carvana?
Yes, sir. Carvana.
And I'm just going, before you say anything, Garo, before you say anything, I'm looking at this double top. Carvana CVNA is a symbol. It's trading at 99.69, down 2.70. And my guess is that you've been short, and I'm saying the 9-period moving average finally crossed negative, and it's into the gap. And I'm going to say to you, Garo, what are you doing?
Yes, sir. I shorted that on May the 24th, on Friday, when the 5-day simple moving average crossed the 21-day on a daily chart. On a daily chart, when 5-day crossed over the 21-day, I shorted at $111, 300 shares, and I'm still holding it. My question is that from you, sir, is that going to come all the way down to 50-day moving average at $95, or the candle that happened on May the 1st, there's a gap there between May the 1st and up there on $91.
91.12 was the high on the 1st. Yes. Okay. So let me go through a couple of things. Number one, congratulations. This was a work in progress. I talk about this very often, that sometimes you get those kind of V-shaped turns and boom, everything just goes immediately. Other times it's what I call a rollover, or on the upside, it's a progressive move to the upside. In this case, it was a rollover, and you can see I'm going to do this just because it's Technical Friday, and I'm sure if you're looking, you'll see that on this chart here, CVNA, Carvana, look at that. It took a long time from the high that was made right there on the 4th of May, which is at 129. Round number high. I don't believe this. You know, I'd have to write a paper. I'll have to take some time one of these days and say, I am writing a paper on 129. I believe that's it. I can't see it too well. 129 on the 6th of May. Let me just type that in. 129.00 on the 5. Oh, of course, I've already forgotten. First, did I say the 1st of May? I think I said 1st of May. Whatever it is, I'll go back and check it. Round number high. And here we are at 99. We are 20 points lower. Boy, those round numbers are spectacular. All right, so what we're looking at, as far as I'm concerned, my, not just technically, but my eye, based on the daily chart, is being confirmed in the weekly chart that this could have a little way to go to the downside. So what are we looking at? We're looking at, within the context of this gap, as Garo said, the gap on the 1st, it couldn't have been the 1st, so this was the 6th of May. 6th of May was the round number high, yeah. So this was on the 1st, the high is 91.17, and the very next day, the low is 111 something like 45. So now what I look at, I always talk about gaps, that sometimes gaps get filled right away, but if it makes a higher high than the bar that made the gap and closes there for 2 out of 3 days, what you've done is you've made the base of that candle the support for a while, sometimes even the midpoint. Well, that's exactly what happened here. And then it started to make a little rollover, and then it accelerated. Now it's in the acceleration phase. So what I like to do when I'm looking at gaps, when it starts to go into it's a big gap, when it goes into a third of the gap, it better hold and try just to tag once even the low bar of the gap bar that made that that big spike. In this case, it was after the 1st of May. That was the 2nd of May. Well, at this particular point, it's more than 50%. So my suspicion is that over a period of maybe a week, this could accelerate. But I'm saying over a period of a week or two, I would not be surprised if that 91 high on that May the 1st, that's going to be tagged. So you said 95. The way I'm looking at this with a stochastic flat at 7%, the on-balance volume just slowly going down, making lower lows and lower highs. The MACD very weak with a very wide aperture between the slow and the moving average, the relative strength. The pink 9-period moving average, if it expands by Monday or Tuesday, the distance, the aperture between the crossover, the pink line, 9-period moving average, and the 14-period moving average, if that expands, this can go down quite a bit. So let's go one step at a time. And I have to look at, there's very little to see. So I'm going to have to say, yes, we're below that. I would say,
Mr. Basil,
yes.
If you put a 50-day simple moving average there, you will see that it has a very good support at 95 on 50-day moving average.
So I'm looking at 97, between 97 and 95 is the first next decent support you've got.
Yes.
So I agree. So now let me do the other side. I'm going to say if for whatever reason, if there's a sudden spike, who knows, anything can happen. If there is a sudden spike, the 106 in the pink 9-period moving average should be very strong resistance. But actually, even before that, right in there, I would say 100, and it's at 99 right now, 100, the whole 104 area should be very difficult to break above. That would be my cap on the upside. And the weekly chart, the weekly chart's got a lot to go to get to become negative. But I would say that the 14-period moving average of 92, that could be tagged sometime next week. So I hope that helps you.
Yes, sir. Yes, sir.
Congratulations.
Thank you, sir. Have a nice weekend. Thank you.
You too. Same to you. Good to hear from you. So, folks, let's just do this. So we're looking at Carvana, and that kind of goes with that whole area. Look at this. Ford is, where is it? Ford is having a little bit of a bounce today, but it's really struggling at the 200-period moving average of about 12.14 in the, 12.22 is the daily. Almost the same thing in the weekly chart. General Motors is trading nice two candles today. Maybe it's because the yield's coming down a little bit, but it's also it's struggling a little bit. Well, the weekly chart is still pretty good. So now let me do a couple of other things. I had a question here. Where do I see the SMHs going? Remember, it's a stepwise move. Oh, now it's down 481 at 237.46. So this candle right here, this little tiny doji candle, one step at a time. First step will be a low off, if I can read the darn thing, 2. Hey, I'll be back in a moment. I can't read it. Dow's up 36, S&P's down 21. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model? when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks, we're back. I'm just trying to see what day that is. That is the 4th. Okay. So the 4th of June is Tuesday. All right, so here we go. So the question is SMHs, what technique would I use to be able to at least give some sense of direction and some sense of timing and some sense of left side, right side price plumb line match? Well, if I had to go to this peak D right here, which I would like to do, it would extend it out for about another day. I'm being a little conservative. I'm taking a particular candle. That's what I teach in my webinars. And that says that the SMHs has this Chapman wave inside wedge target support line. The next real level of support by 1:30 today is 234.30. And then it goes lower each day, each hour or so of the day, right? It's a 120-minute chart. So each bar is 2 hours. So that's what I'm looking at. But it says that by the 4th of June, we should be tagging this low that was made right here, and that's a low of I've got to lean it forward to get this, 220. Yeah, 228. So 228 on the left side. So that would be the target. That's 8 points down from, that's a lot. But in the meantime, that's the way I'm looking at it. And that would be the first. Now, that happens to coincide with the 200-period moving average, which at this point, and it's rising, it's going to start to flatten, is at this particular point at 227.24. And that is at 10:44 a.m. Eastern Time on the 31st of May. So that's what I'm looking at. And the severity of this candle, even if it had a reverse right now, the severity of this candle is exactly what we've been anticipating as something that was a potential. And that's the reason why we had that. It did what it wanted and then it got stopped up. But thank goodness, a number of people now have said either they short the SMHs or they are have the positions that we discussed yesterday, and I wanted to get a gain today, but so far I didn't do anything. But we have something else that's even more aggressive, but I don't know if it's pulling back. This is the SMH is down 2.27% right now, and it's way more aggressive. Oh, well, wait a minute, not if you are trading. Let me just, if you don't mind. Oh, okay, we're almost there. We're 2%. On the day on this particular instrument. Okay, very good. So now this is what I wanted you to do. I wanted you to, the questions came in. I need to cover things that I normally do. Here we go. Gold Gold right now is trading down 7. Remember that the importance to me of the 14 period moving averages, my technical tool of last resort. Look how it finally confirmed 3 days ago, and so far the gold is struggling. The weekly chart looks great. Look at the silver. Silver right now is down 31 cents, so 31.22. And it's just stuck in this high range. Look how strong the 9 over the 14 is. Look, the MACD is dipping down, hasn't crossed negative. Relative strength is gray line, weak. The stochastics at 81, strong. On-balance volume is a little bit weak. And the weekly chart says silver definitely is superior, doing very nicely. Now, I need to do this very quickly. I want to go to the GDX. The GDX trading right now, sharp move down. Candle-wise, it's a big red candle, but it's only 27 cents down at 36.29. This is potentially a dreaded H pattern. What is the dreaded H? It's this pattern where it comes straight down. I have to find it right here. There it is. There we go. Comes straight down. Try to rally, fade at a peak A or a peak B. Take out the left side low. You can go a lot lower. Well, there's your A. And it's holding quite nicely. The 9 is still over the 14, but at any point in the next week, if it takes out this low right here, that's the low of 34, right about 34.45. That's going to be very important. Most significant will be this pattern. So I'm always looking at 3 core patterns: straight up, straight down. That's 1. Cup formation, that's 2. Arch formation, that's 3. Combination, in this case, of 1 and 3. Dreaded H, because if it fails at a peak A or a B, takes out the left side low, can go quite a bit lower. And on the upside, takes out the left side high. Whoops, in the cup formation, can go quite a bit higher. So here we are, potential dreaded H pattern. I'll draw it in right here. So what I like to do for subscribers is I like to have different issues in all price ranges. There's some people that say, at this particular point, I don't want to put too much money to work. I want to do whatever it is. Or I don't care. I love whatever it is. It's trading at 550. I want it. I like it. I'm going to get it. So I like to have all things. And then when it comes to the 3 times, long or short, I love when it's very single digits and it's 3 times. And that's where you can really get some action percentage-wise. And you don't have to put so much money to work, and it can give you a really good bang for your buck. So that's what I like to do. In this particular instance, we've actually raised a lot of cash. We had stocks. We had DKNG. This is DraftKings, and we just got out of it. We took lots of little bits off. It made nice percentage gains, but then we got out of it with a bit of a loss on the call. And I said, that's what. We gave it our best. It made a peak D in the weekly chart. It's making the dreaded H. This went to peak A, peak B, and there it is. I'll type it in. It's easy to say, but it's a little more difficult to do it. So I'll draw it for you so you know what I'm doing. I usually make that gray when I think it's going to fail. And look what happened. Not only did it take out the left side low, but it plunged underneath it. Therefore, it can do a 1-to-1 of the body of the arch to the downside. That gives it a target in the 32 range. And I can, for right now, it's almost the end of the week, I can say sell mode in the not just the daily, but in the weekly chart, peak E in the monthly chart. So, so we have all different positions. We still have our long position from our uranium stock from way back. It's more than doubled, but it's a work in progress there as well. Now, the other thing that I want to look at is, and we have an oil service stock. Looking at crude oil, it's not very good, down 50 cents. There's your lowercase h. That goes to another lowercase h. So it looks like a lowercase h going to a lowercase m, and then another arch. If this arch fails, watch out that it doesn't take out. Usually I look at the first trough on the left side for the arches. In this case, I'm going to go to that one right there at about 76.10. That's crude oil, continuous contract. It's failed so far to make the cup formation, so I can get rid of that. And it's failed at a 3.82. Yeah, it fell to 3.82 right there. All right, so crude oil is not doing very much. Let's go to platinum. Platinum is up in the higher range. It's had a very nice rally. Now it's just stalling sideways. It could be a dreaded H, but so far the 9 is so way over the 14. It's looking okay. Platinum at 1,038. Wheat, that's wheat. Is peak E pulling back a little bit in the daily chart. Strong leg C in the weekly chart. Soybean, continuous contract, had a double top pulling back. Now the 9's almost going to turn negative. Looking at corn. Corn is also arching over. I'll be right back. Basil Chapman, Dow's up 12, S&P's up 23, down 23.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tiger's Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks, just before we wrap it up here, great programming today, of course, so stay tuned to everyone. Steve comes up next. First of all, remember I spoke about, maybe a year and a half, 2 years ago, I said, Bondi, Crudy, Dolly, Goldie, Vixie. Just remember, these are now all separate entities. They're not. The correlation that we had looked at is just, it's long gone. And here it is. The Dow's down 32, the dollar's down 32 cents, making the dreaded H pattern, and the market is weak. So that correlation doesn't work. And gold is actually down just only a little bit. Okay, so that's done. What I wanted to also say is in the bonds, did I type the wrong place, please? I haven't got time. Get into there. It is. Okay. So the bonds, right? Let's go to the TLT. TLT, the TLT is having a really strong rally, but it's in the Chapman Wave inside track repellent zone, and the 9P moving average is still pink. So this is a work that we have to see whether there's follow through to the upside to the 9150s. It's at 90.64. Okay, let me just show you this. The day is young. Anything can happen. I mean, you just have no idea. But look at the weight of this down move. Look at those big red candles. And even today, tried to rally and couldn't fail. Day is young, as I said. End of the month, anything can happen. But that weight of evidence says that we should be testing the 37,800 area at some point fairly soon. And that's going to be very important. That's number one. Number two is the VIX index. The VIX index right now is trading up. It's down. It's down 14 cents at 14.33. I love this. I love the fact that the Dow's down 2,000 points. The S&P started to roll over. The SMHs are running. And the VIX is ignoring everything because I want the VIX to wake up when the market's already down sharply. I don't like those sudden big moves to the upside. That's always a sign that we're about to have a very strong rally. This is not a sign of that at all at this particular point, in my opinion. Stay tuned for the great programming coming up, and check out my daily newsletter. And I'll be doing my video tonight, probably for subscribers after the bell closes. I'd like to get it done. Have a great weekend.